If you need a loan for every situation, I mean, bad credit, no assets, no revenue, etc., you have to do this. I mean, I want to share with you a certain logic you need to follow to actually win all the time. So here are the steps I really want you to pay attention to. Again, I'm talking about you needing a loan for every situation. First thing is you need to clean up your credit. I don't care, I don't care about your revenue, sort of your revenue model, your revenue situation, your asset situation. Clean up your credit. We're talking about making sure you have an ability to clean up your credit. I'm not saying you have to bring your credit to 800. No. If your credit is around 500 or 400, that's okay. But start cleaning up your credit. Basically, when we talk about cleaning up your credit, we're talking about certain things that really are sort of really dragging your credit to the bottom, okay? First of all, check your credit reports for errors. We're talking about errors, all kinds of errors. And those errors may actually hurt your credit score. You might be thinking, well, you know what? I have a low credit score because of my past behavior, financially speaking. But hey, listen, what if you actually have a wrong account in your credit right now? You have closed accounts reported as open and incorrect credit limits. So that you have all kinds of situations where you have errors that are just dragging your credit score to the bottom. Okay. So clean up your credit. The second thing is that when we talk about clean up your credit, you gotta stay on top of payments. Everything I'm telling you has nothing to do with your situation, though. No, I'm talking about what you can do personally, your personal responsibility to make sure that you are cleaning up your credit. So you have to stay on top of payments, whatever it is. If a credit card issuer is telling you, hey, listen, the minimum amount due is $20. And the open charge, the open balance is $1,000. Try to pay like $20 minimum, but try to pay like $100 or $200. Okay. So when we're talking about staying on top of your payments, it's always a matter of being financially disciplined. Also, when possible, you can request a credit limit increase, because a credit limit increase will have a great opportunity when it comes to helping your CUR. We're talking about your credit utilization ratio. Okay. So, but those are the three things. When it comes to cleaning up your credit, make sure that you really check for errors. You need to actually request a credit limit increase and staying on top of your payment history. Okay, of your payments, very important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to have a wonderful conversation. That's for sure. The second thing you have to do here is that if you want a loan for every situation, you need to rebalance your debts and income. I don't care how you do it, but you need to rebalance your debts and income. The thing is that it's all about you having a situation where you are living within your means. You need to understand, people have no idea how to get loans, but it's simply because the lender is looking at your situation and saying, you know what? If I grant this person, this borrower, this potential borrower, if I grant the $50,000 loan, will he or she be able to repay me back? It's all about repayment strategy. It's not about your situation, your assets, your liabilities, your revenue, whatever. No, at the end of the day, what really happens here is that the lender is really worried about you being unable to repay him or her back. That's what it boils down to. So if you're able to have a situation where you can rebalance your debts and income, that's really cool. And when we talk about rebalancing your debts and income, we're having a conversation about your DTI. There's an important element called DTI, your debt to income ratio. This really determines how lenders are looking at you. And basically that means what? It means that if you have too much debt compared to your income, then we have a situation here, right? Which means that you might actually have to rebalance things. You might have to maybe find another job or find a second job, for instance, or you might have to reduce your debts. You might have to reduce your expenses. So that's really important. And the thing here is that, what will happen here is that if you're able to boost your income and lower your debt simultaneously, you got to do those two simultaneously. If you do it simultaneously, you are increasing your debt to income ratio. And you are reducing your debt to income ratio. And because there's a negative correlation, and there's a negative correlation between, I would say, an inverse relationship between your debt to income ratio and your credit score. In other words, if your debt to income ratio goes down, your credit score goes up, which is a good thing. So this is kind of cool. This is why you want to rebalance your debts and income. But this is not something that happens that's going to happen quickly, though. It will require some work. It will require some logic. It will require some strategy, and it has to happen over time. And you have to agree that it will happen over time. It ain't going to happen overnight. It's not going to happen like within 30 days. Some people tell you, well, yeah, you can actually rebalance your debt and income in 30 days. You can increase your credit score in 30 days. It ain't happening. This is not going to happen. You're not going to have that. But you might have something that happens gradually over time. We're talking 90 days. We're talking 180 days. This is totally possible. So your strategy number one, clean up your credit. Number two, you want to rebalance your debts and income. So be sure that you have that strategy really, really seriously down packed. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about stuff you can do right now if you need a loan for every situation. The third thing you can do right now if you want to always get a loan is to actually be very measured in terms of the amount of loan you're asking for. And so do not ask for too much cash. See, the whole thing here is that if you want to get a loan, if you want to be approved all the time, then you need to really find a situation where you have to ask yourself, again, going back to what I said earlier, the lender is asking, how sure am I that this borrower is going to repay me? And so if you're asking for a large loan amount, the lender right off the bat will decline you because he or she knows that you will not be able to repay the loan, right? Because when you actually compare your income and your current income and debt situation, and when the lender looks at your other sort of responsibilities, your other commitments, your financial commitments, he or she knows that you're not going to be able to pay the loan back. So do not ask for too much cash. You have to be measured here. It's really important to understand that when we talk about loans in general, there are some responsibilities, there are some commitments, there are some implications. First of all, when you have a large loan, I'm not even talking about the impact on your budget. I'm also talking about your ability to sustain that loan over a long period of time. See, that's the thing, because the lender is thinking, hey, listen, and if this borrower wants me to lend him or her, say, 50 grand over 5 years, that's a long time, because stuff can happen over 5 years. You're talking about 60 months. But if you were to actually lower the loan amount to, let's say, 20 grand or 15 grand, and you were asking for 3 years or 2 years, then the risk becomes manageable. And this is what you have to pay attention to. You want to actually give the lender to look at you as a manageable risk, quote unquote, manageable risk. And if the lender looks at you as a manageable risk, then you are going to be approved for a loan that you want anyway. So be very careful about your ability to repay the loan. So do not ask for too much cash. You want to ask for cash that is not going to squeeze your budget too much. Okay. So basically, but everything goes back to the DTI that I spoke about earlier. So you want to make sure that when you ask for a loan, whatever extra loan payments you're going to have to do, you have to make sure that it doesn't push your DTI ratio too high. If you want to have a loan for every situation and you want to be approved, you want to think about also considering a cosigner. In some cases, it's just very important to ask for a cosigner because you are going to have the right opportunity, the right person. Because sometimes let's say you have no revenue, you have no assets, you have no income, nothing at all, and how are you going to repay the lender? If you want the lender to approve you, then you have to ask the question, which is, how am I going to repay the loan that if I ever get approved? Because the lender, again, doesn't care about your situation. He or she cares about being repaid and making some kind of money off of the transaction, right? In other words, you repay the principal plus interest. And the thing is, if you don't have any assets, where are you going to find the wherewithals to actually repay the loan? So that's why considering a cosigner can really help you. Obviously, when we talk about having a cosigner, we're speaking about a cosigner who has the ability to repay the loan should something happen to you. Because see, the thing is, you are the main signer, that's for sure. But cosigners also bears some responsibility. I mean, actually, total responsibility, not just some. Total responsibility. Both of y'all happen to bear the total responsibility for the repayment of the loan. So this is why this is a joint burden here. So you have to really be aware of that. So when we talk about finding a cosigner, sometimes people say, well, when I'm thinking about cosigner, it has to be a family member. It doesn't have to be a family member. It can be a friend. It can be a colleague. The only thing is there has to be a relationship. There has to be a strong relationship. There has to be an element of trust before you choose anybody to be your co-signer, because stuff happens. God forbid something were to happen, you just find yourself on the wrong side of the life equation, and then stuff happens and things become complicated. But you want to have somebody reliable. If you have somebody reliable, then you can really you can actually navigate all kinds of situations, credit wise, financially, or whatever. So this is really an opportunity for you to choose the right partner, if you will, the right loan partner, to actually boost your chances of being approved. So you want to consider a co-signer, but please choose a co-signer who is better off than you, financially speaking, not only from a credit score perspective, but also from a financial perspective in general, income, assets, and what have you. If you want to actually be approved for every loan application, no matter your situation, you want to actually think also about finding the right lender. See, the whole thing is, when we talk about finding the right lender, we're speaking about having a clear idea that in this lending landscape, in this lending ecosystem, you have a variety of lenders. Okay, when we think about having a loan, don't just think about, well, I'm going to apply for a loan at my local bank or my local credit union. No. Those days are over. I mean, you can still do that. You can still apply though. Don't get me wrong. But nowadays you have a constellation of options, really. I mean, from you have online lenders, you have alternative lenders, you have lending marketplaces, you have crowdsourcing. I mean, you have like a community lending. So you have a lot of places where you can actually borrow. And again, those places, just be aware that you will get a loan, but you might have to pay a high APR depending on your situation, depending on your FICO score and the financial situation in general, right? So it's really important to find the right lender for your situation in terms of, hey, listen, yeah, I live here in Arkansas, and basically I have a credit score of 600. How do I qualify for a loan? What kind of loan can I qualify for? What lender can actually accept to lend me? So those questions are listen, I am in Florida. I have a FICO score of 540, and I have this. I'm just looking for a loan. Or I am in Alabama. I have a FICO score of 720. I'm looking for a loan. So you have to really have a clear idea about the type of lender who will find you amenable, the type of lender who will find your application interesting. Okay. So it's always important to really understand that if you are looking for a lender, it's always good to go for the lender with whom you already have a relationship. We've said this on this show before. You gotta go to a bank or a credit union with which you already have a relationship. Especially if you have a direct deposit coming to the account, then they really see that you are working. They see that you are paid periodically, and they see that you are making good money. I mean, hopefully good money. So it's always great to start where you are already known. If you want to actually, if you need a loan for every situation, and you want to actually qualify for every time you apply for a loan, you gotta actually just look for pre-qualification. This is so important because you want to actually boost your chances of approval, right? But how can you boost your chances of approval if you have no idea, like basically, of those chances? So this is why you want to pre-qualify. Now, when we talk about pre-qualification, normally online lenders such as SoFi, such as Happy Money, such as you have a lot of them. They actually pre-qualify. That's what you want anyway. You want that pre-qualification. So Best Egg. Okay, so you have a lot of those players, and they allow you to pre-qualify. And pre-qualifying really is kind of cool because it preserves your FICO score. It preserves your overall credit worthiness. You do not want to lose like 5 or 10 points every time you are looking for applying for a loan. No, you really got to be strategic here. So which is why you want to actually pre-qualify before applying. And again, when we talk about pre-qualification, at least you have a chance to know how much you could qualify for, how much you can get, were you to apply, how much you can actually get. So it's all about making sure that you have a great strategy to say, you know what, I'm expecting a loan of $10,000, but I could pre-qualify for $5,000. So it means that the market right now, the lender market, thinks I am qualified for $5,000, not 10 grand. So pre-qualification is really good, and you want to systematically do it no matter what. I don't care. I really don't care. You want to systematically look for pre-qualification. That way you have a clear idea what your chances are. And so when we talk about pre-qualification, also some banks and credit unions also allow you to pre-qualify, even though that's rare, because those banks and credit unions, they would rather have pre-qualification for credit cards. For example, Chase has a pre-qualification link for a credit card. So does Bank of America, but they do not offer the same thing for loans. So this is more complicated. Okay, I mean, for instance, you have PenFed, a credit union that has a pre-qualification link to the loan, and but it doesn't have a business loan program, at least yet. And so it's one of those things you have to really, it's all about trials and errors and see what really works for you. You're going to have to do some research here to see, again, what kind of a program you can pre-qualify for. But at a minimum, you can always pre-qualify for a loan from an online lender, such as SoFi, such as Best Egg, such as Happy Money, and such as Avant, such as Upgrade, Upgrade. And so this is kind of cool. And you can also try lending marketplaces like Lending Tree or Lending Club. Those also are really great when it comes to pre-qualifying you. So this is just fantastic. Boss, I want to quickly remind you about today's topic. We're having a conversation about sorry about that. Let's say what you can do. I need to really drink some water here. All right. Thank you. So basically, you need to have if you want to have a loan for every situation, you need to really think about what you can do. And I'm sharing with you a few tactics to really, make sure that you qualify all the time. The last thing you want to do here is to, if you need a loan for every situation, you got to start working right now on reducing your debt, because your debt has a big impact on your ability to actually acquire more loans in the future. You need to understand if your current debt situation is already high, nobody's going to be willing to give you more debts. In other words, nobody will be willing to give you more loans, because they're thinking, well, you already have a lot of debts and you're not able to manage that pile of debt. Why should we give you more cash? So you got to have a strategy where you're constantly working to reduce that debt. And again, this is not something you can just do like a one-time thing. It has to be a long-term strategy, and it has to be something you have to think about. It has to be well thought out. And when we talk about well thought out situation, we're talking about you having a strategy where you look at your credit cards, you look at your loans, you look at your income statement, you look at your revenue, you look at your salary, you look at everything on I would say on a holistic basis to have a clear idea what really works for you. And again, if you are in a relationship, then you have to work on this thing holistically, look at it from a household sort of point of view. And if you do this, if you're able to have this sort of holistic analysis, you are going to find the right way to start saving money, and you're going to be able to redirect that savings onto reducing your debt, which you should have anyway. And because this has a great impact on your DTI, I think I've said before that there is an inverse relationship. There is a sort of like inverse relationship between your debt level and your debt to income ratio. And you want to make sure that you are in a situation where you are reducing your DTI so much that your credit score can only shoot up. And you want that to shoot up. You want that to actually go back up. And this is really cool. And so this will help you actually boost your chances of being approved for loans no matter what, no matter your situation, no matter your income situation, your assets, your liabilities, your revenue, your salary, whatever. Okay. And so this is it's one of those things where you have to be in a situation to ask yourself, am I able to get approved? Do I have the right debt situation? Do I have the right debt amount, debt balance? If you do, then yes, then you would have actually succeeded. But again, this thing takes strategy. It doesn't happen overnight. Thank you so much for your attention. I really appreciate it. I want to share with you, I want to do a recap here. So here are the steps you need to follow if you are trying to look for, if you want a loan for every situation. You want to clean up your credit. You want to rebalance your debts and income. You want to, don't ask for too much cash. You want to consider a co-signer, find the right lender, pre-qualify before formally applying, and work on reducing your debts. Thank you so much. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.